let me start by welcoming you all to this important and very timely panel. It's very good to have you here among us. And let me start also by thanking the DIFC for organizing such an important summit. Today, as was presented to you, we have four distinguished speakers. I start with Peter. Peter is from the EU Commission. He is actually the key person who has contributed to the MiCA, the EU Markets and Crypto Assets Regulation. He has worked for the Commission's Fintech Action Plan and Digital Finance Strategy and co-chairs the European Commission's Fintech Task Force. Peter has extensive experience in EU policy and regulation in a wide variety of fields, including single market, financial services, digitalization, and security, foreign policy sanctions. We're very lucky to have him among us. I also like to present Ryosuke. He's the Chief Fintech Officer in the Financial Services Agency of Japan. He is the key leader in this area in Japan. He is also the co-chair of the Virtual Assets Task Force at FATF. Prior to his position, he conducted research and regulatory framework and governance mechanism in decentralized financial system. He is a senior fellow of the CyberSmart Research Center at Georgetown University. Moving to Elisabeth. Elisabeth is the Assistant Director and Head of Conduct and Innovation Policy, Policy and Legal at the DFSA. Also very lucky to have you among us, Elisabeth. She has worked in the DFSA for a while, and prior to joining that, she led the conduct regulation team at the Association of British Insurers, where she managed a team of policy advisors responsible for influencing the UK and the EU conduct regulation of insurance and pension markets. Finally, we have Marianne Bechara, Senior Counsel at the IMF's legal department. She is the co-supervisor of the Fintech team at the legal department, liaising with other policy departments and internal organizations working specifically on Fintech. Very happy to have you here. I will start by saying a very few words. First, introducing myself. I'm a Deputy Division Manager at the Financial and Fiscal Law Division of the Legal Department. We are the legal department working on very broad range of financial and fiscal law issues, on core issues like supervision, resolution, and central banking, tax, budget laws, but specifically also on fintech and the new priority areas and climate. We are a team of 30 lawyers, very diverse background, also working on capacity development for our members, 190 members, and also on surveillance issues and core IMF work. Just before giving the floor to our panelists, as you all know, even though that we have witnessed serious failures in the crypto assets universe, the sector is growing, and there has been a lot of efforts, increased efforts by traditional financial intermediaries that are teaming up with fintech startups and also exploring new technologies that are based on DLT and engaging in tokenized securities and deposits. And therefore, it's very important at this juncture to coordinate together national authorities and international organizations in order to help achieve trust and confidence in this sector by exploring, for example, regulatory and supervisory frameworks, coordinating together to shape and direct the market practices. The IMF, in its financial and monetary stability mandate, and due to increased use of digitalization and payments, basically has integrated such a key priority, included it in an agenda, and integrating it in its tools that are used for its surveillance, capacity development, and policy also functions. So each panelist today, from their end, will give us their own experience on how they contribute to the crypto assets policy, including the legal aspects and legal policies. So turning to our panelists, we will have two rounds of questions. The first will be, I'll be asking one question to each of our panelists for the first round, and then we will move to the second round. I will start by my left. So Peter, as one of the first thinkers of crypto assets, and since despite the efforts of the international standard setters, there is still no consensus or agreed upon taxonomy on the different types of crypto assets, could you please explain the approach taken by MiCA to define and classify crypto assets, but also more broadly to regulate these different types of crypto assets?
Yes, and it's a pleasure to be here. Good morning to you all. There is indeed no global consensus on taxonomy and whether crypto assets are securities or commodities or so on. But we in the European Union looked at crypto asset developments and we saw great opportunity, but also great risks. And there was a consensus among G20 leaders that, especially when stablecoins were announced, that no global stablecoin arrangement should start commencing before the regulatory framework was in place. So we didn't have time to wait for a global consensus to emerge on the taxonomy, and we decided to move forward, not to repress crypto assets, because we think that repression, one, doesn't work, and there's nothing to be repressed. It's just technology, it's an innovation, we saw enormous opportunity, so we wanted to create a safe space to onboard crypto activity in the European Union. And we effectively have, well, it depends on how you count, 4 categories. We have financial instruments, existing financial instruments in crypto format. So securities, whatever you have, that are now featuring on distributed ledger technology, and those are left to traditional financial regulation, because traditional financial regulation does not specify the form in which these instruments occur. But then if you look into the crypto ecosystem, we saw that the vast majority of crypto assets on the market do not meet the definition, the European definitions of what is a financial instrument, what is a security. And the MiCA regulation really focuses on this very vast area. And there we really distinguish between 2 main categories. One, the so-called stable coins. These are crypto assets that purport to have a stable value in relation to or by referencing to another asset. That other asset can be a fiat currency, or the other asset can be a commodity, a basket of fiat currencies, a combination of it. So these are the 2 categories of stable coins which we have. Those that reference a single currency that basically are pegged to a currency. USDC is an example, US dollar tether is an example, there are a few others of course. And then you got all the others which are pegged to a commodity or a basket of commodities, gold, what have you, baskets of currencies as the original Libra plan was supposed to be, and those we call asset reference tokens. And they are regulated quite strictly. The issuers have to be authorized to issue them in the European Union. They need to hold capital, they need to respect governance requirements. They are subject to requirements on how they invest the reserve. They have to hold 100% reserves, and they must invest these reserves in highly liquid, highly secure instruments. They have a redemption obligation at par towards the holders of the crypto assets, and so on. And then we've got the other category, which we call general crypto assets. And this is the enormous universe of crypto assets that exist, with Bitcoin and Ethereum at the top. But there are thousands and thousands of other crypto coins. Like you really get dizzy if you go down the list of crypto assets that exist and the creativity that people have. And for those crypto assets, the general crypto assets, we have a notification requirement. So if you want to market them in the European Union, you must present a white paper in accordance with MiCA, and you must notify this white paper to a authority in the European Union. Once you do that, you get a passport and you can market it throughout the EU. And so consumers, European consumers and investors will be duly aware of what they are buying and what the risks are, because the white paper requires you to disclose the risks, the nature of your crypto asset. It also prohibits you from making any assertions whatsoever as to the future value of your coin. So marketing your coin as the ticket to the Lamborghini that you wanted forever is not allowed in the European Union. Thank you.
Thank you so much, Peter. Very interesting also that you started with your comment on we couldn't wait for global coordination, we need to step in, which is exactly why we're pushing to have very fast global cooperation on this front. So, Ryosuke, to you, could you tell us, basically, we heard from Peter the MiCA and the European experience, can you tell us about the Japanese crypto assets regulatory development and strategy and what you have been doing on this front, please?
Sure. So thank you very much for having me for this important discussion, and I'm happy to share Japan's experiences in this sector to date. So our journey started nearly 10 years ago. It was in 2014, and then actually more than 70% of Bitcoin transaction was taking place in an exchange in Tokyo. The name is Mt. Gox. And then, but suddenly, it was hacked, and then nearly 500 million US dollar worth of Bitcoin was stolen, and a lot of investors got damaged, and then court procedure to get their fund back is still ongoing. So we learned how we need a good regulatory framework for the consumer protection and then financial stabilities. And that's why in 2016, we have amended Payment Services Act to introduce registration system for the crypto asset service providers. And then we thought that something like Bitcoin will be used as a means of payment at that time. And actually, it was not happening as of now. But that's why our regulation is more like, for the payment purposes. And then after that, we have updated our regulation twice. And then second amendment is in 2019. And then we tightened regulation and then introduced so-called cold wallet requirements. So we asked crypto asset service providers to custody more than 95% of customers' assets in the offline environment. And then we have been criticizing by industry for years that our regulation is too strict. But actually it worked when FTX incident happened. So FTX Japan customers already got their fund back thanks to this cold wallet requirement. And if I'm not mistaken, many other countries are trying to introduce similar regulatory requirement for now. So and then last amendment was last year, so we have introduced new regulation for stablecoin issuers and the intermediaries. And then, as Peter mentioned, it's always difficult to, have a good definition about what is crypto asset and then what is stablecoin. And then, for sure, we need a global coordination. And then I'm in charge of Financial Action Task Force, in charge of AML, CFT, crypto policy. And then we are developing something like travel rule for crypto asset service providers. And then I understand, some industry players are not big fan of something like travel rule, but we need some kind of international standard to ensure safety and then security of customers, and then to have a sustainable development of this sector. And then in terms of further global coordination, Japan would like to share our 10 years experiences to regulatory colleagues. And then we are very happy to work with EC and in Dubai and the other countries. And then that's something we would like to do going forward. Thanks.
Thank you, Ryosuke. This is very interesting to see from Japan's perspective what you've been doing. So moving now to Elisabeth. Elisabeth, we know that the DFSA introduced crypto assets regime in 2022, and the focus was providing more clarity from a regulatory standpoint. Could you give us some details about this regime and what are the legal and policy considerations that were factored in to establish such a regime?
Okay, thanks, Karine. And just for those that are not familiar, the Dubai Financial Services Authority is the regulator in the DIFC. That's the financial free zone in Dubai. And as Karine said, we introduced a regime in 2022. It wasn't just a registration regime, as others have introduced. It was a comprehensive regime. It covered a whole range of risks that we saw in the market. And similar to what Mika did, we also had to create a new financial instrument to reflect the different type of crypto asset that we were seeing. A few of the aspects of the regime, financial services can only be carried on with crypto tokens that are recognized. Now, we saw at the time, and we still see now, that there are, I think, around 10,000, maybe more cryptos on the market. There isn't a lot of publicly available information about them. So we wanted firms to be doing due diligence on the types of crypto tokens they would be offering to their clients, and then apply for them to get recognized. Now, that is no more than we would expect a firm to do to know about the products and services that they are offering in the market. We also have additional requirements around what we call fiat crypto tokens, others called stablecoins, because of the use cases that we're seeing in that particular area around payments and also for clearing and settlement. Unsurprisingly, there are a few things we don't allow, specifically any privacy tokens or any mixes that try and make sure you can't see who's held them or traded them. Now, we introduced that framework in 2022. The market moves incredibly quickly. We have more recently updated those rules at the beginning of this year, and we're about to bring those changes in June. That was to reflect three things. One, market feedback about how the regime was operating. Two, to reflect market developments. And more importantly, we saw more international standards being developed in this area. Last year, we saw the introduction of recommendations from IOSCO, and we wanted to make sure that our rules and regulations were aligned with those. And we'll continue to. It's a stepped approach. You know, we won't have got it right the first couple of times. We need to keep addressing what we've got in place, and we also need to react to market developments.
Thank you, Elisabeth. It's super interesting to see as a free zone, what you have been doing really in pushing this forward on and ensuring clarity on the regulation. Thank you. To you, Marianne. So as I said in my remarks, digital money has been a priority for the fund, and there has been a lot of effort on its to include this in its tools, including on policy, legal and non-legal, capacity development and surveillance. Could you tell us a bit more on the IMF's work on this end and the IMF guidance in terms of crypto assets in general?
Okay, as you mentioned, the mandate of the IMF is much broader than regulation. It revolves around monetary, financial, and economic stability. And based on this mandate, the IMF has factored in digital money within all of its main activities to achieve this mission or mandate. So we're not really a standard setter, but we are more of an international financial institution that kind of creates a bridge and helps standard setter disseminate the standards they set up. We do work, the IMF staff does work closely with the staff of the standard setter to set standard and so on. And especially in the area of crypto, we did work with the staff of the FSB on a certain standard setting. Now, the IMF has three main key activities that it undertakes. We do program work, so we lend money, and so we need to be surveilling the program that we do. We do what we call capacity development, meaning we help our member country that comes to us for technical assistance. And we, to do all that, we need a policy ground, an analytical ground, to provide advice and to help our staff provide guidance. So in capacity development, we have a lot of members coming to us for a TA request to reform their financial laws in terms of accommodating crypto in their jurisdiction. We're also incorporating this in our program conditionality. But most importantly, we're working a lot on our policy work to kind of create a basis for us and for our members to know which direction for them to take. And one of the most important instruments we have published was a board paper we published in February 2023. It was the first paper endorsed by the board of the IMF, which is composed of 190 countries, so it's a near universal membership around the globe. And they all agreed that authorities and countries, in order to address adequately the risk that crypto are bringing to their market, a first step is to really follow 9 elements. So those 9 elements really relate to the mandate of the IMF, not only in regulation. One of them is element 5, is related to regulation, but other elements relate to fiscal consideration, to capital flow management, to monetary sovereignty, and so on. And in those 9 elements, there are 3 elements that relate to the law. So really, you would see that the legal component is important in this important guidance, and it's important for the IMF. And I'm sure the panelists will all agree that it all starts with the classification. What is this instrument? If you don't have an answer for that, you cannot move forward with the regulation and so on. So element 4 recommends that authorities establish legal certainty and start with classification. It discusses the risk of having challenges around classification. As mentioned by Peter, there's a lot of instruments out there with different business models. The tendency is, because the technology is DLT, that we all put them in the same basket and we want to regulate them the same way. No. The business model and the functionality of those instruments are very different. So element 4 is establish legal certainty on 3 levels. On the basic, what we call private law, which is the commercial code, the civil code, the corporate code, really starting back with the basics, and then moving up and looking into your financial law, so the banking law, the securities law, and so on. And then the 3rd level is really tax as well. So this is element 4. Element 1 is really revolves around monetary sovereignty, and the IMF recommends that crypto are not granted legal tender status or official currency status. And the board really lists the risk that could be involved. And the last element is developing and enforcing regulatory oversight, comprehensive framework on all the crypto actors.
Thank you, Marianne. It's interesting to know what the fund has been doing and pushing such an agenda forward. Thank you. Back to you, Peter. You mentioned what you've been doing and the regime. And can you tell us a bit about the lessons learned in your journey? And just to help other regulators, learn from what you have learned and move forward.
Yes, I think the main lesson learned is that this is an innovation which is here to stay and it's unavoidable. There were attempts to repress crypto assets and distributed ledger technology. There are certain jurisdictions that ban it. There are other jurisdictions that make it legal tender, not recommended by the IMF, but still they do. So you see a wide variety of approaches. What we saw in the European Union is when financial regulators warned investors against crypto assets, we saw an uptick in the market. So people behave a bit like children. If you tell them not to do something, they'll do it. And therefore we said, rather than trying to repress it, be realistic, be pragmatic about it. It's a reality in the market. People want to engage with it. We're not endorsing it. We're not saying that it's a good investment or not. But if people are going to engage with crypto assets, they should be doing so under a clear legal and regulatory and policy framework. And that's what we've been trying to do with MiCA. Now, there's a lot of focus on the issuance and what is the instrument, and is it a payment instrument, is it an investment instrument, a security, and so on. And that's important. But even more important than that, which is actually the second part of MiCA, is the entire chapters on what we call crypto asset service providers. Because the customers, the investors, rarely deal with the issuers. The people they deal with are the exchanges, the trading venues, the brokers, the wallet providers, the advisors, portfolio managers, all of this ecosystem of service providers. Those are the ones that need to be regulated, because those are the ones that really undermine market integrity if they behave in an improper manner. Take, for example, Bitcoin. You can't really regulate Bitcoin because we don't know who the issuer is. We don't know, it isn't issued. You don't know who's behind it. But there is an entire ecosystem of service providers that provide services to Bitcoin. And these people, I'm not saying that they're doing anything illegitimate, But it's important to bring them into the regulatory fold, not only to protect investors and consumers, but also to allow and to empower the regulated financial fabric, as we know it, the banks, to engage with them. Because the traditional regulated financial sector will not engage with an unregulated ecosystem. They only engage with regulated ecosystems. And that's why it's important to have a policy and legal framework that recognizes this reality.
That's true.
Thank you, Peter, and I can't fully agree more with you on not repressing this sector and resurface it from a different, unregulated angle. Ryosuke, back to you. So what are the next steps for the Japanese authorities in terms of regulation and policies? Anything in the,
Sure.
forward?
So, yeah, I totally agree with what Peter mentioned. So regulation and the regulators is not enemy to innovation. Rather, we should be important stakeholders for the good development going forward. And then in terms of challenges from Japanese perspectives, so regulatory perimeter issue is still challenging. So let's take DeFi, for example. So some of the so-called DeFi arrangement which has a centralized point should be regulated as a crypto asset service providers, even under existing regulatory framework. But it's still difficult to identify who should be regulated. And then sometimes there is outside of Japan. So it's kind of offshore service providers could be another challenge. And then peer-to-peer transactions could be increasing in the future if stablecoin will be mass adopted by ordinary users. So the landscape is changing very fast. So we have to keep an eye on market development, and then we have to be as flexible and agile as possible to accommodate our regulatory framework. And then without saying it's a global phenomenon, it's global by nature, so we need a global coordination. And then we understand the regulatory framework is different. So we regulate some types of token as a commodity and then as a payment instrument in other countries. So it's okay about those differences, but what matters is to make sure regulatory interoperabilities among different countries, and then we need international organization like IMF, and then potentially FATF or something others for the good coordination. And then, of course, input from private sector is essential to make policy which makes sense to all of us.
Thank you, Ryosuke. You read my mind. These are my concluding remarks. Elisabeth, back to you. So I'm sure you faced a lot of challenges and risks while establishing your regime. So if you have to pick some of these risks, what would you tell our audience, what are the most relevant challenges and risks you had to deal with?
Okay, I see I've got 14 seconds to get across my point, so I'll speak quickly. I think one of them, this is a very global market, and engaging with other regulators is so important. They've all got different experiences that they can share. You can learn from one another. We've found that incredibly important, and have been doing that probably since about 2020 to learn more about how we should be doing things. Also, we've spent a lot of time training our staff up. We don't necessarily need everyone who's overseeing this market to know how to code, to know how the blockchain works in intricacy or DLT, but they do need to know about the products and the services that are being offered. They need to know about the terms. So we've spent a lot of time making sure our staff know how this market works, and we'll continue to do that.
Thank you, Elisabeth. Marianne, 3 seconds.
Yeah, it's going to be very hard for a lawyer for 3 seconds.
So do you think tokenized deposits should be included under the general framework of crypto, or should they have a
In 3
specific
seconds?
legal? 3 seconds.
In 3 seconds. I'm going to pull the lawyer's card and say it depends. It depends because we have no laws. So it depends on the contractual framework. It depends on the business model. It depends on the instrument functionality. Tokenized deposits are really the trial of incumbent institution existing for crypto, for their own crypto. Again, classification is a big deal. They use terminology like tokenized deposit, deposit token, bearer, non-bearer instrument. So Labeling is very hard to distinguish at this point. It's very early at this stage. It could be a deposit, but the problem, even if it's a deposit, the application of deposit regime will be hard sometimes because you have minimum reserve regime that will be hard to apply. You have capital requirement. You have deposit guarantee schemes issue. So a lot to say that. So maybe in the next panel. Thank you.
Thank you, Marianne. Thank you, everyone. I think this is, for the last 30 minutes, you proved to me the importance of global coordination, and the IMF, hopefully, as Ryosuke said, could play an important role in that, as we are covering all the member countries. And again, Ryosuke, I think, mentioned that the private-public dialogue should be important, and listening to the industry, what they are facing. This is a moving target discussion, so I'm sure we will have more opportunities to discuss. Thank you again for a wonderful panel.